You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out with what is hopefully your favorite bi-weekly option show. I know it's mine. Hopefully it's yours because you're listening to it. It is, of course, time for the Option Block. My name is Mark Longo from the aforementioned network, as well as, of course, from the ever-exciting OptionsInsider.com. Don't forget the in front of it so you can get to it, unlike you can get to Amazon right now, which is kind of interesting. We'll get to that in a little bit. Of course, you guys can enjoy the program across the broad spectrum of devices you want it delivered to your device of choice, your iPad, your iPhone, get on over to iTunes or your Pocket Cast, whatever you like to use, Google Podcasts. We don't judge. If you want to go deep, the website, our mobile app, the best places to go deep into the archives. And, of course, if you want to join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, Mixlr. That's where you get the raw, unpolished version. You get to see how the sausage is made, or in this case, hear it. And it sounds quite interesting, but then you get the nice polished podcast the next morning. So whatever your preference is, get out there, get consuming, get listening. Make sure you hit us up. Questions, comments, insights, pearls of wisdom. You guys should also be playing along with our questions of the week. Our new question of the week this week has to do with earnings season, everyone's favorite topic again. We'll get to that in a little bit. But first, let me introduce my cohorts, my partners in all things Option Block crime, my fellow Option Block all-star. Let's see who we got. Let's spin the wheel. Let's see who we got. Oh, it's spinning here, listeners. It's spinning. And, we come up snake eyes. I don't know what that means. We're winning or we're losing, but here's who we've got. Starting with, let's go out to the sleepy hamlet known as St. Charles, where they have tasty gyros. They make a pickle or two. They have some nice fountains. And indeed, they have Uncle Mike Tussaw from St. Charles Wealth Management. Uncle Mike, welcome back to the old show, sir.
Always good to be here, but the snake eyes, though, St. Charles must have been betting on the don't pass line or something, because we don't roll snake eyes in St. Charles.
Look at you, don't pass. Are you a craps man, sir?
No, but I've witnessed a lot of other fellow option traders at money shows in Vegas attempting to be through the years.
I thought you were a fellow craps man. I haven't played in a long time, but I do like myself a good craps session every now and then. It's one of the few. Everyone likes card counting and blackjack. It's not quite as fun, though. You get to apply some of the similar logic in craps with a little bit more social game. People actually have fun. They get excited. They yell. They cheer. They get depressed at the same time. Unless you're playing don't pass. Those are the guys we hate, like you, apparently, over there on the old don't pass line. Let's toss it over to Maine as well. We got the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmeline. Mr. G, you seem like a don't pass guy. You a don't pass guy?
You know what? It's been so long since I played craps. I can't even remember, to be honest with you.
I can see you rolling from the dark side. That just sounds like your game, sir.
Yeah. You know what? The whole thing is, I just remember, I feel like just having some money on numbers and being backspread and kind of being like backspread, and then it all goes horribly bad. So,
backspread. I like it. There you go.
That's the way I think of it. It's what it is.
Remind me someday to tell you about my epic battle deep into the wee hours of the morning in the old shady realm of Atlantic City, back when it was still a Merv Griffin casino. That's how long ago this was. I had an epic battle on a little half craps table against a guy playing Don't Pass. It was just me and him going at each other into the wee hours of the morning. Oh, how fun it was. But instead, I digress. Let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, you know the drill. It's time for us to break down what was trading, what was going on, what was lighting up our collective tapes. It was kind of a bit of a weird mixed bag of a day for the most part. The markets were kind of slightly up, then they're slightly down, kind of a mixed bag, kind of a pick 'em. They felt like being up, they felt like being down, mostly small percentage point wise. There's nothing really huge. Most of the markets ending kind of unched on the day, slightly up, slightly down. The only one that has any little slightly real downside bias being the Qs, right around about 0.3% or so. Of course, we saw all of this uncertainty means VIX cash getting a little bit of life back into it today, up at the end of the day about half a handle, getting as high, threatening, never quite breaking into, but threatening the 13 handle. But never quite getting there. 1297 before coming back off, settling right around the 1260 level or so. Which is if it continues, nice little gives that back, and a little bit more, maybe right around that level. That's nice, looking nice. My prognostication, of course, the Rock Lobster coming in, nickeling me on the show last week. How dare you do such a thing, sir? But a lot of things popping off today. We got some earnings popping off. We'll get to Netflix in a little bit and all the other good stuff going on. But first, let's see what's collecting, or I should say, what's hitting our collective tapes. Let's start with you, Mr. Uncle Mike. While you're not busy eating pickles and dancing in the water fountains out there, what was catching your eye out there in St. Charles today?
We had Bank of America with good earnings, so the financial sectors were looking pretty nice today. That's one thing with which I was noticing. So we have that for sure. But the rest of the market looks like a little bit of a downturn in the commodity world and the slippery stuff of oil. I mean, nothing too crazy, but I think the main thing that the market's looking at right now is I think we're waiting to kind of see how the world reacts to this Trump-Putin meeting to see where that goes. I think that we have that. Amazon, I won't steal your thunder. I'll let you talk about that, but that's definitely something to talk about today as well. But for the most part, I think that markets are awaiting how it's kind of like the 8th grade dance with everybody, all the boys on one side of the gym and the girls on the other side of the gym, and everyone's waiting for the other side to make a move. It kind of feels that way. And I also feel like we're waiting on a little bit more from the earnings front as well. So I think it's a wait and see day overall today.
A lot of people out there waiting and seeing, can't get to their own Amazon accounts, which is a weird occurrence. Mr. Rock Lobster, I know that you're kind of out in the hinterland, so online shopping is not really your forte. You like to more carve your objects with your hands. You hack the tree down, you carve it into, let's say, a nice doily for something to use on the table, something like that. So that's what you guys do out there in Maine. Clearly, I have a good handle on it. What was catching your eye in today's activity, sir?
You have your random piece of wood, and you can make a nice cheese board out of it.
There you go.
To be honest, there you go. Nice cheese board. As far as what Amazon, oh my gosh, you know how many Amazon boxes go to all these little hamlets in Maine? Oh my God. I think we could build a skyscraper on the cardboard, on all that stuff.
Start a new business, recycling Amazon boxes. There you go.
Because Mainers, I tell you, they are resourceful. They are resourceful. Like I said, it's a third world country with great roads and the internet. So if you like that kind of thing, come visit. Anyway, what is catching my eye? Well, we did not recover the weekend markdown, although VIX futures were a little bit lower today, but we really didn't cover. Sometimes, when the vol's really sagging, you have the weekend marks. They reset because remember, implied volatility is always for today's date, the trade date. So after the weekend, you usually have a markup in vol because the liquidity providers crush all the option prices. So it always looks like really cheap vol on a Friday just to be a normal vol on a Monday. So, but you watch the futures are a little lower. Waiting for earnings to come out. The bank earnings are pretty good, although you can't, you're not, I guess Bank of America rallied a little bit. I mean, for Bank of America, definitely a rally, but You haven't seen a whole lot out of a lot of the banks as of yet. So I'm looking for that for one thing. And I think the market's really waiting for tech earnings, to be honest. I'm trying to come up like Netflix right now. I don't know if we're going to hit that, but it's not looking very good. But overall, VIX is still in zone 1. It stayed in zone 1, 2, 3 days. Your crystal ball prediction is not looking too bad, but maybe mine will look better. And we've had...
Because you are a scumbag, that's all I'm going to say.
Nothing like getting a front or leaned on by by just a co-host,
yes,
not even the host, just the co-host leans on you.
You just lean through the microphone and just slap me in the face. So that's what you did.
It was just ugly, bad. That would be bad pit etiquette. I'm a quarter bid. No, I'm 26-cent bid. So anyway,
you would not have been invited back very politely.
Yes, in the old days, I would have been a 5/16 bid in front of your quarter. But be that as it may, lower vol, waiting for tech earnings. Most of the earnings have been okay, at least bank-wise. Netflix aside, but I guess we'll save that. But Netflix is looking a little sick after the close here right now. Wonder if that will be a bellwether for the other technology stocks.
We'll get into Netflix in 2 seconds. Of course, they are popping off after the bell. I do want to hit on first. A lot of people are hitting us up. I kind of discovered it myself anecdotally. You know, it's become such a juggernaut these days, and we use it so often here. Even you folks out in the hinterlands of Maine use it. You know, Amazon is just the kind of de facto, supplicating to all of your, or I should say, supplementing all of the things you are supplicating. Some people like to supplicate themselves to Amazon every now and then. Perhaps we do too much over there. But that said, it looks like it went on. They've been pushing this big Prime Day, their biggest day of the year next to Black Friday. They've been talking about it for weeks now, and it kicks off today, 3 p.m. Eastern to 2 p.m. Central. So, of course, I did my duty right around an hour before showtime, logging into the old Prime account to see what was good, what was popping off, what was happening, get the feel for the big Prime Day experience. And the site's just unnavigable. I never really had this before. There's the deals button, and it's there, and you click on the deals, and it takes you right back to the same button again, and it's not doing anything, which is an odd experience. And then finally, after fighting through, you get to see some of the deals. That's awesome. And actually, just to kind of try out the experience, like I picked up a deal. I said, okay, this is actually a pretty good deal. I will get one of these things. And so I click it, it goes into my cart. I hit buy, and then it spins. That never has happened before on Amazon. And it says, we're having unprecedented heavy volume. Try back in a few seconds. But your item is still in your cart, which, of course, it wasn't, because when I came back, the item was gone, and then there was no way to tell if I had actually ordered it because the order wasn't updated, so I wasn't going to go back and really buy it again. I still don't know if the process has gone through. I'll have to go check, and that's just kind of some of the small anecdotal things we're seeing out there in Amazon. So, and if you're not familiar with Amazon, obviously everyone knows their shopping side. Some people are not familiar with, they are also, in many ways, the de facto backbone of the internet through their S3 services and everything else. They power a lot of the services you use every day, like Netflix and others. A lot of that comes through Amazon S3. So they are very much the backbone of the internet, which what makes this so odd and so disturbing. They can turn on the spigot into a fire hose if they want in terms of bandwidth. So they should never be having this problem, unless, of course, someone's coming at them with a DDoS attack or something like that, which I would probably suspect is the case, that's got to be pretty massive if you're able to take Amazon off their heels. Maybe the combo of all the traffic they're getting, and just I would have to wager it's something malicious, but that's kind of interesting and or scary if someone is big enough or an attack is big enough to even take down the backbone of the internet. I don't know, Mr. Rock Lobster, Mr. Uncle Mike, have you guys attempted to do any of your civic duty, which is some Amazon shopping on Prime Day yet? Have you had any of the harrowing experiences I just described?
I have not. I will rely on your Amazon experience, and with Amazon actually being slow, it is kind of concerning. I will agree.
Mr. Rock?
I have done absolutely nothing with Amazon Prime.
How are you going to live in Maine without your Prime boxes?
Actually, I'm even trying to think. It's possible I've never ordered anything off of Amazon before.
What? How is
yeah.
You're not an American? You've handed in your card, sir. That's like saying you've never been to Disney, all the other things. These are the things you must do as an American. It's your civic duty to spend an ungodly amount of money on Amazon every month. That's just required by law.
It's not that let's say my wife has, she does a lot of stuff, but I don't, I guess I said, oh, I'm looking at that. And if she buys it, I guess that counts that I bought something, but that's the deal.
Now, I was kind of surprised as news got out. These things, they get out there pretty quick on Twitter and other things. That starts coming out that, hey, Amazon's down. I think Market Watch started writing about it and others. It's obviously a big story, particularly on today of all days, on Prime Day. I thought for sure they would hit the stock a little bit more than they did. Got high intraday, got to around 1842. I ended up closing about 20 handles shy of that, and so it gave up. It gave up a lot of its rally, but still it was up about 0.5% on the day, about 9.5 handles or so. I thought for sure it would close down. I mean, this is interesting. I'll have to pull it up here, see how it's looking in the after hours. It's off about another 30 handles. So they're coming for it here now as a result, because this is not a good thing. This is their business after all in terms of keeping the web up and running. If they can't do it for their own core business, what does that say when they're looking to power the rest of the internet? Perhaps also maybe a little bit scary that so much of our internet eggs are laid in the Amazon basket. Maybe something to people have often talked about single point of failure in the financial markets, but in the internet world, that is clearly a big thing right now. Speaking of things that are big and kind of down, let's move on to what the Rock Lops was also talking about, getting back some of these trading tales, and we'll keep an eye on the Amazon thing. You guys are already popping off with your ideas and thoughts. But it is, of course, the beginning of earnings season. Refreshing, a nice thing to kind of be able to focus on some micro trends again, as opposed to these macro kind of nonsense that you really it's hard to make heads or tails of sometimes. It's clear that the market has problems with it as well. Trade war, will they, won't they, all this fun stuff. Instead, we'll focus on some nice micro things like Netflix. Netflix coming out after the bell today. You guys know the old Widowmaker. It's been an interesting one to watch of late. Closing today, right around the 400 level, 400.5, up about 1%. This is a name that was pricing in about $35, so right around 9% in terms of their straddle. This was actually a pretty, let's see how active. That's almost, not quite 2x, but a pretty decent day out there for Netflix in terms of options volume. They average about $1.90 a day. Today doing about 314,000. A little bit of a slight bias, about 1.3 to 1 to the calls over puts. So not a huge bias given what we're seeing out there. And in terms of what we're seeing right now in the after hours, as Mr. Rock Lobster alluded to, they are kind of coming for the Netflix too. Maybe this is parts of the Amazon thing. We all know, I think Amazon and their S3 is a lot of the backbone of what Netflix does. So maybe if that's down, maybe I haven't checked my Netflix today. Maybe that's down as well. I don't know. Either way, the street not liking what they're seeing. They're coming for it in the after hours. It's off about 50 handles, or about 12.5%. They were pricing in about 9%. So the market giveth and the market taketh away, off about 50 handles. Mr. Rock Lobster, we'll start with you. Any of your hardcores, any of your crazies in the pit chat out there slinging any of the old Widowmaker today?
Yes, there are some guys actually that bought some cheap downside flies. So they look.
So dinner
really
is on them.
Really good right now, to be honest. Also, and then tomorrow probably would be a good opportunity for a little bit of juice selling in Netflix. So I would say yes and yes. Usually any kind of those earnings trades, they tend to be sort of like cheap flies and cheap shots. You can kind of create stuff that's it's a low dollar trade, not necessarily a high risk trade. We tend to be more, if it makes a move to X dollars, you allocate small dollars to it. So that was as far as the crazies in the pit. That's what was interesting, at least as of right now. But it certainly looks like, do you know that stock was $161 a year ago?
Yeah, that seems like such distant memories that's even below the 300 handle seems like so far and so long ago. But you're right. Yeah, it was trading 180 back in December. Yeah, it's just madness. It's funny. It is a weird business if you pay attention. I know you're a diehard fundamentalist, probably more than me here, Mr. Rock Lobster. But you start paying attention to their kind of their revenue numbers and how much they earn and versus how much they keep. they keep an appalling amount of money for such an enormous company. They generate so much revenue, and it all goes away into these content deals and spending on new content and everything, that they make about as much as, you know, your average decent size, you know, mid-sized business. Nowhere near what their, you know, market share or mind share would have you probably lead you to believe. And yet Street keeps loving them until at least today. So it looks like your clients out there, your mentees, fading it with some aggressive downside flies. Now, of course, this is the old story. It looks good now, but since we don't have after-hours options trading, they can't close those out now, of course. So you're kind of left. I guess if they're aggressive folks, maybe they want to do a little gamma scalping. They can scoop some up down here, and I guess they're looking all right. But that's kind of your only option, pun intended, out here. Because hopefully, for their sake, we shall open up here at these levels tomorrow, and then they'll be very happy, and they'll continue buying your 8th on a 10 lot webinars for many years to come, Mr. Rock Lobster.
That's, of course, that's what I want. That's what we want to help people. But I'm looking at this and like, I think there's going to be some opportunity in this thing tomorrow as far as, because you got to post earnings, higher juice. And Netflix is one of those things where I think it's a great company. And it's like, I got it when, you know, a long time ago before, what didn't it split? Didn't it go to 700 and split like 7 for 1? I keep wanting to think that's true like many moons ago. But it's just, I don't get it because it got so expensive. Well, maybe it didn't. Maybe I'm just, you know, I'm on some sort of glue.
Well, that we know. That's kind of a given that you are on the glue, sir.
There's just a lot of glue sniffing. I know. Oh, it was Apple. Oh, I can't remember all the splits anymore because all these technology companies.
Apple did split, yes.
Apple did split, yep.
You've been out there huffing the glue. You've been watching too much airplane. Listen to me, airplane. You could tell you're from a previous generation, sure. All your references are from airplane. I know you guys are out there slinging your Netflix, slinging your Amazon, slinging your Apple. We'll get to all that good stuff in a little bit. Apple, of course, having earnings right after the bell today. I'm teasing you, Uncle Mike. Instead, let's keep on rolling right on into it. Is Tesla mystery put time. Yep, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we break down a lot of interesting, weird, wild, wonderful stuff. And a lot of different weird tickers that probably don't usually talk about on the trading block, which also makes it fun. But we kick it off with a name you guys are probably familiar with. This is the old Model 3 maker, I should say, attempting to be maker, a.k.a. Tesla. Closing today, 310, off about 9 handles, or down about 3%. So another day, another 3% move for Tesla. Pretty much about what you'd expect out there. They average about 206,000 contracts a day right now, doing about $1.50 or close to it today. So a little bit light on the volume side today, but not on the mystery put side as we go out to our old friends at Jan 2019 50 puts. There's nearly 60,000 open on the tape. And so it goes to show that, and of course, a tell-off day, people coming in for these puts to the tune of 650. Hitting the tape, so a little bit more than 1% going back up on the tape there today. So OI perhaps continuing to grow out there. This thing's still hovering a little bit shy of $1.90 at 96 cents right now. Also worth noting, 225 of the 20 puts going up, about nearly 15,000 open on that strike as well, and almost 500 of the 10 puts. 1,500 open there. Think about that, Mr. Rocklopter. Someone slinging nearly 500. We were joking about the VXX Jan 10 puts, but those have a chance of actually happening. Someone's picking up 500 of the Tesla Jan 10 puts. These are not for a penny either. These are for a dime.
I'm looking at this. I'm like, how much debt do this Tesla have outstanding? I mean, the reality is with Tesla is the whole company feels like a giant call. You know, it's still. I don't doubt that guy Musk's ability to raise money, but you know, what's the company worth? So it is a tough one.
I mean, the 10 handle by January, just think about the massive implosion that would be necessary. That would be the crater of all craters. That would make Enron look like child's play.
I know, it would be a smoking crater.
If it got to that level by January. That's impressive. We haven't really seen a lot of action in those before, the 10s. Usually a lot of stuff has been pumping out a little bit longer than a year or so, going out to the 20s. The Jan 20s, I should say, Jan 2020s, because they're trying to get themselves a little bit extra time, and they were doing a little bit of that today as well. The Jan 2020 50 puts doing about 240 or so, about 21,000 open on that strike as well. They're trading about $4. If you're curious, want to pick up a few for the old personal account. And $1.50 hitting of the Jan 2020 10 puts. Those are going for $1.25. Almost about 12,000 and change open on that strike. And a whopping 40 of the 10 puts in Jan 2020 going up as well. Not quite as many as the Jan 2019 10 puts, but still enough to catch the eye. About 600 open out there. Weird paper across the board. Those 10s, those are intriguing. As we keep on moving to some newcomers here on the old odd block. This is well, actually, we talked about this before by its old name. This used to be called Cliffs Natural Resources. Now it's Cleveland Cliffs Inc. Ticker symbol CLF. This is a mining and natural resources company. Closing today, $8.20, off about 20 cents or off about 2.5% or so. This is the name that does about, actually, pretty decent paper, about 27,000 contracts a day. Today doing 101,000. Pretty even calls to puts, which is probably because it was kind of a little bit, I guess you can call it, it was doing a lot of paper out here today across the board, but the trade that caught our eye out here was it was like a Jan risk reversal with a stupid, maybe, to the upside. It was the Jan 6 puts going up for 21 cents, 40,000 times. So just crushing coming in below the bid. These things went up for 21 cents. They were 25 at 26 at the time. I think paper looks like they're coming in and then aggressively above the offer for both of these. So I guess you got to stretch a little to get things done out here in Cleveland Cliffs these days when you want to do 80,000 contracts. Doing 20,000 of the Jan 11s for 35 cents above the offer, and then 20,000 more of the Jan 12s for 22 cents also above the old offer. So maybe they decide they want a little bit upside, and they couldn't really decide on the strikes. Maybe they want to do a little split strike, so they go between the two. You know my feelings on stupids, listeners. But doing that 20,000 times each, so a total, again, of 80,000 contracts going up in this one trade. It has the feels, all the feels. My spidey sense is giving me the feeling of a nice little bullish risk reversal to the upside. If that's the case, this is... it's got to move pretty good. This thing's closing at 820 today. Let's pull up a chart of good old Cleveland Cliffs. That name doesn't really roll off the tongue to see where it's been and how realistic those levels are. And yeah, that's a pretty aggressive level. A year ago, it was trading about 7.5, so about 70 cents shy of where it is. Its high was back during earnings around January. It got to about 9.15. And has kind of been hit that level a few times, or flirted with that level a few times since then. Now it's hovering in the 8 handle again. So this guy needs a nice pop to 11 and beyond to infinity and beyond by Jan, which is an aggressive move. If that is indeed the case, it could indeed also be a vertical, which doesn't look like it is, but it could be a vertical. In which case, he still needs a nice move to 11, but he's not quite out as much then on the upside. Still, I don't know. This is a weird one, Mr. Rock Lobster. Hence its inclusion in the old odd block. What is your spidey sense telling you? Are you feeling funky, bullish, stupid with a put kind of financing, or are you feeling something else?
You know, on this one, this isn't one of those ones where this is one of my value trap ones that I just kept going down and down, and that's one where I just had to exercise the puts because it never came back. So it wasn't a big loser, but it was a little loser for sure. And then I started dabble again when it was like, $5-6, and it made a little run out. Because I like these kind of little junky value plays because I feel like, it's big commodity, basic material. I think they do their iron ore and all that kind of stuff. So brutal competition from China and Australia and everything like that. I think this person is actually betting on a recovery, and it's a straight up sell some puts and pay for your calls. And I think they're just going for it. I'm not why you would do an 11-12 vertical call
spread.
That's
where I kind of lose the script a little bit there. That's aggressive.
I think they just stupided it up. They just, you're looking at 26 cents twice. I think they just went stupid on it, to be honest. I guess you got to ask Tusaw, but it feels like they just went full, they're buying the calls. It's around even dollars for tremendous upside in here. It could do that. I mean, this is, because let's just say all this trade stuff sort of works out where it's not so awful. And, there is a lot of volatility to the earnings in this company. So it's one of those things where, you could get one of those pops. There used to be tremendous short interest in it. I don't think there's as much anymore. So I think it's one of those like commodity producing stocks that can produce a large move. And it just feels like that's what they wanted. They want just a big upside play. That's what the pricing looked like. So I don't know why you wouldn't buy a vertical spread, but as you have, so the reason that, you get your vertical for a credit, I guess that would be it. But if it goes to $14, they might be a little grumpy about that. So I'm thinking the trade wars end at some point. There's some sort of rationalization, and then, maybe there's a pop in all this steel stuff. So, but that's what it looks like. Somebody wants to get really, really long.
Does have that feeling. We're going to put this one in the to be watched. We got a little bit of time on this one. This is kind of like the polar opposite of the Tesla play we were just talking about. Someone out there thinks Tesla is going to crater by Jan. This guy thinks this Cliffs is going to double or move 50% at least by January. So both equally interesting. We'll keep an eye on this one as well. We got a big file of trades to keep an eye on lately, Mr. Rock. We might start going through it just to clear out the backlog here as we keep adding more every show. Next up, everyone's favorite, the Interpublic Group of Companies, Inc., ticker symbol IPG. This is a global advertising and marketing services company. That tells you everything about what they do. Closing today, $23.70, up about 40 cents or about 1.7%. It's a name that does a whopping 920 contracts a day. Today doing 36,000. And of that 36,000, about 32,400 coming in this one. Another kind of looks like a three-legged risk reversal, maybe bullish. We'll see. It's the AUG 21, 24, 25 risk reversal going up with the AUG 21 puts kicking it off 10,800 times for 15 cents. Splitting the uprights exactly over there. And then turning around doing looks like the AUG 24, 25, again, mid-market. This doesn't have the feel of a stupid. It has more of a feel of a vertical on it. So I'm going to say the AUG 24, 25 vertical, doing that 10,800 times as well. Let me see if I can pull up the vol on these puts really quick just to see. Oh, they're actually, because there's nothing trading on these things. That's why they're showing tick-ups today. But I guess it could be. I mean, if you're buying this and selling that vertical against stock, then why are you bothering selling the vertical? But still, that's a conversation for another day. You could have, I guess, tax consequences for it, but selling a one-handle vertical. Either way, it's weird. It's only a one-handle vertical. They're doing it, if they are indeed, for 35 cents. So 35 cents to make a buck. Total of 12,000 on the puts and about 12,000 on the vertical as well. No OI to speak of on any strikes. So let's look at it first and let's just pretend it is indeed the old bullish risk reversal to see exactly. Again, it closed just shy of 24, so those are interesting levels on the call side if that is indeed the case. Let's pull it up here. Look at a chart of IPG. A year ago, they were trading right about 25 bucks, so pretty much firmly at the upper band of this vertical here. Then they sold off pretty hard, got down to about 18, 19 and change. Then they've kind of rallied back up again to about 25 again back in April. They've kind of been all over the place and hovering right now kind of in the little bit slightly higher to mid-level of that range here. So interesting one, Mr. Rock Lobster. I'm still going to lean, I think I'm going to lean bullish risk reversal on or bullish vertical with put kicker, aka risk reversal on this one. But it could very easily be argued the other way. That this is somebody, maybe he's got some stock looking to hedge it on the 21 level. And then the upside vertical, buying that 25, that one I'm less enthused by. I guess he doesn't want his stock to go away if it does indeed go. Weird stuff. What's your take on this one, Mr. Rock Lobster?
Look at this thing. It looks like the same damn thing as
it does, doesn't it? Isn't that impressive? we got a theme going here.
Why is everybody obsessed with $1 call spreads?
At least the other stock was $8. It made a little bit more sense.
I think that had at least, but this, this is a 15-cent put. It looks like they whacked the put bid out, and it would appear buying a call spread. So, I guess if you want to spend some money, you're going to make 15 cents on this trade. You're going to take in 15 cents for a short put, which to me is, unless you just want to own the dang thing for $21, I guess that's reason. It's something, I guess. But oh my gosh, I don't. This is
high praise. This is something. This is a trade that went up.
All I can say is this is in the class of love your broker.
I was going to say, this guy is quite fond of his broker. This guy is quite fond of his broker. What are you thinking when you put that other leg up on the vertical there? Why? What do you got, $1?
I think Tusa is just telling his client, listen, you're going to thank me that you took in 33 cents for this call.
Uncle Mike, is this you out here advocating these $1 verticals with these puts? Is this you're doing here, sir? Do we have you
I'd have to say no on that one. 33 cents, it's nice money, but it was not me.
It's good money. Let's see if we can keep the good money alive. Unfortunately, our theme has come to an end, Mr. Rock Lobster. As we come into our final name here on the odd block, this is QEP Resources Inc., ticker symbol QEP. QEP closing today $12.09, off about 60 odd cents, about 5%. It's not a great day for QEP. This is the name that does about 2,500 contracts a day. Today doing about 34,000, about 2-to-1 puts over calls. That's kind of where our eye of Sauron was drawn out here. It looks like the old put roll, and these are in the money puts now, which is kind of interesting, which makes this roll even more interesting because they didn't decide to change their strike at all. It was the July SEP 14 put spread going up, starting off the day 5,500 times. Actually, no, I'm sorry, 11,000 times. So they did that twice. And that's pretty much the volume on the day. 11,000 doing this. The July puts for 210 and the SEP puts for 227. So they're paying a whopping 17 cents here. Actually, no, it looks like they're short, and these are short puts that they're rolling because they're hitting the bid or pretty close to it on the SEP puts and lifting offers literally on the July puts. So perhaps another reason why they're keeping that strike, that makes more sense on the short side. They're deciding, you know what, I drew this line in this ad. You blew through it, but it's going to come my way again. So of course I'm going to keep it on until September. When I saw them on the buy side, I saw them keeping the same strike. It seemed kind of odd because these are deep in the money puts now. But on the short side, that makes a little bit more sense. They're being, shall we say, what's the word? Stubborn, which is always a good way to continue your trade. Let's look at a chart here, and maybe they have some reasoning for what they're up to here. A year ago, about 9.25, so well shy, about 3 handles shy of where it is right now. Got up as high as about almost 14 back, 13 and a half, or 13.74 actually, back in late May, and it's kind of been almost got that level again recently. So it's kind of been flirting with the 14 handle, and then again coming off again today. So it's kind of been a wild ride here in QEP over the last couple of months. And our friend here, clearly, if they were indeed selling these puts, and it looks like they were to start off with, then then that was an aggressive level, the 14 handle. Let me pull it up really quickly and see if I could see when indeed these bad boys were open. There's a total of 16,000 open. I forgot to mention that on the July puts. Looks like 9,500 traded back on the 1st of June. It's not too long ago when they were about 230 or so, and another 5,000 going up on the 8th when they were about 240. So higher levels then that he bought them back for, at least a little bit of erosion, even though the stock, he probably is wishing he did it a couple of days sooner, because these puts were trading, what were they up at? They were trading much less, about 10 just yesterday. So, yeah, he had his chance. Mr. Rock Lobster, does this have the feeling of, shall we say, a bit of a stubborn trade to you as well?
This could have a little stubbornness to it. There's so much paper around all this. This is one of those. It's one of those weird ones that I'm feeling that okay. Close in. They don't want to cut. They don't want to give up. Let's just say they don't want to give up their short puts. Maybe is that what you're feeling on the stubborn thing? Like we're not giving up. We're thinking about it, but we're not going to give up this position, no matter what, come what may. We're not giving up the position.
That was my feeling. When I first saw it, I was like, that's weird that they wouldn't adjust the strike in September, go down a little bit. Then I looked at it again and said, oh, these are short. So then they're just being stubborn. If you were long these things, you probably would roll down a little bit and take your money and be happy. But no, this guy's like, nope, I drew that 14 line in the sand. You may argue that it was a little aggressive back when I did it. I probably would. And now it's come back to bite me. But I shall not adjust. That's what you teach in your webinars, right? The never diverting from your line in the sand, correct?
Well, I sometimes in this particular one, you sell these puts cash secured if you can afford to. And the only thing I would do, I would like owning just some junk puts against like a more in the money put like this, because it just makes you less grumpy. I'll always take a little less money if I'm right. It's much better than being grumpy and totally poor than when you're wrong. So I think this person, and then there was they're kind of loading up on some calls or maybe closing some short calls as well in August. So I think as of right now, somebody was looking for kind of, that oil rally to sustain, and they got, I think I'm feeling like they got a bit of a black eye on this one. I think they went for the swing and they didn't get it. So
yeah, they're only collecting a whopping 17 cents to roll out to July or September as well. So yeah, this one
right.
This one is a weird one. This one.
It's in the weeds. This trade is officially in the weeds for right now.
I'm going to file this one in the to be stubborn category. We'll keep an eye on maybe this one as well to see how our friend, if his stubbornness was warranted, or if perhaps he needed to discretion should have been the better part of valor. Meanwhile, it's time for us. Maybe we should have some more discretion with your questions, but we don't care. It's time to keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. You guys know what that means. It's time for you guys, as I affectionately like to call you, the crazies out there to get out there and make your voices heard, questions, comments, insights. Also, time for you guys to vote in our polls. You can do that if you're listening to the podcast as well. It's going to be up. It's our question of the week, after all. And this week's question of the week, let me pay off last week's first. We asked you guys last week, again, getting into the earnings season theme. We asked you guys, hey, earnings trading with options can be challenging. Some live for it, others live to avoid it. So we asked you guys if you hold your positions through the earnings announcements. If so, how do you do it? Long premium, short premium? Do you just say the whole thing's too risky? You guys came out 28%. It was pretty tight, the voting, actually. 28% saying, yes, you trade through the event and you do it to the dark side, which is interesting. 27% saying, no, you don't do that, but you trade around the earnings event itself, so maybe before or after. 25% saying no to the whole thing, it's just too risky, and 20% saying long premium. So long premium was doing well earlier in the week. That kind of surprised me. So this maybe it's kind of how I thought it would play out. Our audience is kind of interestingly mixed in that sense, but I kind of thought dark side would win the day, and it did. This week we're asking you, earnings season, back in the saddle once again. Options traders, they're gearing up for a busy season. Just quite simply, which names do you think are going to dominate your options trading this earnings season? We'll talk the whole season, not just the week, so that way we can keep the ball going a little bit. If you don't see your favorite, get out there, give us your favorite. Gave you 4 big choices. The old Netflix popping off tonight, the old Amazon, the old Tesla, and the old Googs. Mr. Uncle Mike, we'll start with you. Which of these 4 do you like, or perhaps would you like to substitute one of your own?
I'll go with the Googs. Let's do that.
I figure for sure you'd be in there trying to substitute some Apple. Just for old time's sake.
Let's go with Googs.
The old Googs. Okay, 1 vote for the Googs. Interesting. Mr. Rocklobster, same question to you, sir.
I'm going Googs. 2.
Interesting, because Google, doesn't really get the love that much anymore. It's not getting the love in our poll. At least it's only been up for about an hour, so this could all change by tomorrow, let alone by the end of the week. But so far, I guess because of, shall we say, recent events maybe biasing things a little bit, Amazon getting 50% of the votes, followed by 30% for Netflix, and only 10% each for Tesla and the Googs. So interesting. Tesla not even getting overshadowed by the madness out here as we keep on rolling. By the way, let's check in. Let's see if they're hitting Amazon still here in the after hours. Yeah, it's still off about 30 handles, about 1.5%. Netflix off about $57, about 14.25%. Looks like your boys put flies there are looking good. Maybe you want to raise their rates on their mentoring a little bit out there. That's a suggestion. All right, here's a interesting one from FlyGuy, like the handle. He says, hey, well, hey, back at you. Hey, what do you guys do with your long calendar spreads? Do you close out the short leg if the stock doesn't move and then keep the long leg, or just close the whole spread out? It's an interesting question. You know, you see calendars usually, and obviously he's talking about kind of the same strike, not a diagonal listen, but kind of a straight up calendar, same strike, different months. This is kind of a lot of people like to advocate for calendars in this sense. Well, you buy them, and then if everything goes your way, the front strike goes away to zero, you close it out, and now you got this great call that you got for, or whatever, whatever way you're doing it, for less than what you would have paid for otherwise, maybe even free, who knows? And so that's kind of one use case some people have for calendars, and they have this kind of naked leg that's kind of just out there, and they can kind of let it fly. Or others like to just close out the whole thing, kind of like he alludes to here. It's kind of this is kind of interesting, I think, almost religious schism type debate. Depends on your kind of use case for options. Uncle Mike, perhaps we'll start with you. I'm curious to see your use case for long calendar spreads. Are you a kind of shut the whole thing down once the first contract is done kind of character, or do you like to play a little bit with that long option you have?
I'm a little bit of both, I would say. I've done both and will continue to do both. If you are the type of person that likes to consistently do multiple short legs against a long leg, meaning you want to get multiple months in against your 8-month call or whatever the case may be, I'd encourage you to be flexible enough to get out of it depending on what happens. So in other words, let's say that the volatility picture changes between those two options, then you got to get out of both of them right away, or you may have to get out of both of them right away, either for better or for worse. However, let's say that you have a longer dated option and it's looking good, everything's staying the same, then in that case, then I think it makes sense to keep the long open. So I would suggest it would make sense to do whatever the pricing, volatility, and all the option pricing factors dictate at the time of your decision, and don't be so hard and fast to one side or the other.
That's why this question is kind of challenging, because you're right. It's kind of I was thinking about it myself when it came in, and I'm kind of much more of a in the middle guy. I kind of do a little bit of both. I guess if I had to lean one way, I guess I probably do lean kind of the way you described, where kind of shorter legs in between, so not just one but multiples. But again, you're right. You have to be flexible with those. You can't just keep that same strike. If it goes from a straight up calendar to diagonal, you got to be able to roll with that. So literally and figuratively sometimes. But an interesting thought question, Mr. Rock Lobster. Same question for you, sir. How do you like to roll with your calendars?
So I break the calendar down always into the age-old trading question is, are you using the underlying to trade the options, or are you using the options to trade the underlying? So if you're using the options to trade the underlying, it would fall in the school of like Mike does. He's like, okay, I'm going to buy these calls and I'm going to write calls in front of it because I want to be long and I want to try to finance long and gas it somewhat on the upside. So that's kind of I would say like a long delta rolling strategy, usually with kind of buying a farther out call. That's one. Number two is you use the underlying to trade the options. And that's, when you're looking at forward vol and actually trying to grab some vol edge and create, what you hope is a massive theta trade in the position, something that I like managing a time spread with a contract or the underlying to get the delta flat, but just give me a lot of decay. So those are both ways we go in option pit. And I think trade number one is you want to be long and you want, I think the biggest thing with the time spread is you don't want to sell the forward or the close to the money close to expiration term, when it's not worth it to sell. So literally, sometimes that option can be so cheap relative to the one you're buying that it's really not even worth it to sell it, because if you do get a rally, it totally destroys the performance of your long contract. Now that you can learn about vol and pricing that way. So that's what I would say is, you got at least be aware of that, because there are lots of things I don't like trading options or that some clients do. And one is you sell a contract that absolutely does you no good, even though you think it might do you some good. If you get the move you wanted, you make no money, and that leaves you very grumpy. You're in grumpy town, so you don't want that trading option. So I would say, yes, I like the two schools. So 1 rolling, 2 forward value, and 3 also when you really want a reduced directional component, as in, so you trade a time spread, at least a long time spread, you put it where you want the underlying to go. So you're either putting it out of the money put-wise or out of the money call-wise, and you're looking for a drift to the strike. So that would be, I think, case 3. And in that case, you get your drift to your strike. You just close the whole banana. And I guess it's a pick 'em on whether you want to keep the long contract rolling. What I don't like doing is I don't like closing your short when you have a capital loss in that and you're holding on to the long while you have a capital gain, because then you're taking the loss on the short without locking in the gain on the long. And if you have a switch in direction, that's going to leave you grumpy. So I don't like putting on the time spread and incurring more risk in the management of the spread than you intended at the beginning. So to me, I think that's a trading discipline no.
Lots of no-nos. Interesting thought questions coming in. Got a lot of them here. Let's see how many. We could probably squeeze in one more. These are all dense questions. Here's an interesting thought question-y type one from Duffy. He wants to know, quite simply, how do you handle? No, this is not the one I want. I want. Where is it? I just had it. Here we go. Right below it. This comes from Flyer. What are some of the best ways to trade put options? Very basic, yet not. I don't think we've ever had the question phrased quite that way before, which makes it kind of interesting. That sky is the limit. There are many different ways to trade put options. The way probably people most encounter them is probably the way we advocate the least here is just straight up buying them. Just hey, go out and just buy yourself a put. Then you're hedged, and all your worries are gone. I think if you listen to the show for any length of time, we probably don't advocate that route. I'm going a little bit of the backwards route on the question here, what we don't advocate. But yeah, we typically start with, the nice basic spreads, identify your range to the downside you want to hedge, use those, just reduce your outlay. Mr. Rocklobster is Mr. Juice for free, so he won't buy a put. Doesn't matter what the heck's going on out there. So maybe we'll start with some of the worst ways, which is, if you need it, if things are melting down, buying a put, there are worse things you could do, certainly, but still. Just coming out there and just buying puts every month or a couple months and just rolling them against your equity position, you're going to discover pretty quick that's a tough way to do it. Mr. Uncle Mike, you spend a lot of your days paying for the puts for your clients or trying to find ways to do so. So what do you have to say here to Mr. or Mrs. Flyer? What are some of the best ways to trade put options, sir?
Well, first off, you want to buy puts on stocks are going to go down. No, just kidding. That would be the easiest. That's good advice.
I'm going to mark that down.
Yeah, and buy stocks that are going to go up, and buy puts on stocks are going to go down. It's that simple. But now I like the vertical put spread is one of my all-time favorites because of the fact that volatility typically tends to become higher when the option is further out of the money. So a lot of times you can get a pretty good deal for it. And I like doing them not too far out, because if you go too far out, meaning 6 to 8 months or greater, then you're not going to quite get the same gamma as what you would have gotten initially. So I kind of like I'm just a fan of the good old-fashioned vertical put spread.
Yeah, it sounds kind of basic, sounds kind of boring, but it's existed for a long time for a reason. It's pretty effective, and you can get funky with it. You can, if you have an equity position, you could do a covered call against that too, and you start getting multiple short legs you have to manage, but they're offsetting all the cost of that call, that put. So all sorts of funky things. Mr. Rocklobster, how funky do you get with your puts?
How funky do I get with my puts? So my biggest put funk are actually. This is what I do. I don't really like buying puts in indexes unless I can find a way to pay for them. Although I don't mind buying them in an equity because equities can swing so much. So my simple rule with put is if I'm like buying a stock for kind of what I would just call a trade, not necessarily a really long-term holding, but let's say something that I'm looking for a bounce on, I buy a put with it because I know I can, at least I'm hedged, like I'm stopped, right? And you could always sell out the underlying if the stock rips, in the after hours or something like that. And then you might have a put for credit, let's say. So you can't exactly do that with just buying a call. You don't get the same flexibility. So I would say as far as funkiness with puts, and my second rule is if you buy a stock and you can't make at least the put premium on the stock purchase, you might want to think about why you bought the stock in the first place. So I would just call those are, trading puts made easy type of rules.
Almost as if you had a webinar of such a title. And if you don't, maybe you should.
It's possible.
All things are possible. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Checking in on our friends here. Netflix off about 54 handles, about 13.5%. So bouncing a little bit off the lows, but not too much there. Got down as low. It's like about three handles lower a little bit earlier. So not looking great for the old flicks. Looking good for your boys put flies, though. And Amazon off nearly 30 handles, about 27 and change, or about 1.5% as well, back down to about 17.95. So in the after hours here, not looking too good for all things. We'll see if they get that issue sorted out forthwith. Sounds like you're using it as a marketing tool. We're so popular, our site's down, even though it probably doesn't bode well for what they got going on. That said, what do you have going on? Mr. Uncleback, we'll start with you. What are you watching for the rest of this week, sir?
Well, I want to see how things come about with how the market digests the big summit in Helsinki. Just watching earnings and seeing if we can get through that 2,800 mark. We're touching it, but we need to get through it.
We do need to get through it as well. Mr. Rock Lobster, same question for you. What you watching for the rest of the week, sir? You watching easy for me to say, VIX zone -6?
I knew you were going to say that. I knew it. God, I wish I could have bet some money somewhere on that. I need a line on that somewhere. Anyway,
you knew it was coming. It was coming.
My guess is we stay in zone 1 as long as the earnings are okay. So that won't be a terrible surprise for me. And the Helsinki summit seems like it hasn't really produced anything market moving, so it's stuck. And as far as 2,800 goes, I agree with Mike. I'm looking at either 27.75 times spread or 28.25 times spread, and I'm thinking the Doors song. Are we going to break on through to the other side? And I think the pattern, at least this year, has been the tech earnings have been great, but it seems like the stocks haven't really rallied after the good earnings because they're up so damn much. So, I'm just guessing we're going to have more of the same of that. So, well, I think we can stay in zone 1 for a little bit, at least for this week, so I can win the crystal ball. I would have a hard time believing we touch, let's say, the 11 handle before Apple earnings come out, because they'll just enough to keep the vol up there. So
look at you trying to twist the knife there a little bit with your going back to your crystal ball predictions, sir. Nickeling me. How dare you?
Shot.
After all I've done for you, sir, you just stick the knife in and then you twist it and you pour salt in the wound on top. I shall remember these things, sir, as I have a long memory. I'm the elephant who does not forget. Unfortunately, though, I'll often forget this show because we're done. That music means we've come to the end of another epic journey through the world of options. Talk some mystery risk reversals, how to get funky with your puts, Tesla, Amazon, Netflix, all that good stuff, and a lot more. You guys, of course, check it out, the website after the fact. Check out that in the archives. Join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. It's fun stuff. Join us live, ask questions, hit us up, make fun of the Rock Lobster, all that good stuff. But before we go, let's go back around the horn. We'll start with you, Uncle Mike. If I am intrigued by what to do with these so-called put options, where should I go? What should I do?
By all means, check out my websites.
Uh-oh. Did we lose Uncle Mike just as he's doing his plug? Uncle Mike, are you there, sir?
Hello.
Are you there? There
Can
you
you
go.
hear me?
Go for it.
Or give me a call at 312-212-3531.
There you go. I promise you his website is much better than his internet connection may lead you to believe. StCharlesWealth.com. And Mr. Rock Lobster, if I'm intrigued by, what to do with these funky things called puts, where should I go over there?
We are going to have a webinar on the 29th of July called Repairing Terrible Trades. It will be 3 of the Option Pit mentors, maybe even 4, talking about trades, repair strategies, fixing bad trades, trying to get back to even, or sometimes whether you just throw in the towel and close them, and also not to get run over in the first place by trying to create better trades. So that will be our monthly webinar on July 29th, and I believe it's either posted to the Option Pit website right now or it will be by tomorrow.
You guys have 4 mentors now?
Well, we have. It's funny because we have some of our clients. One of them is becoming a mentor because he's a really good trader. And we brought on another guy who rates the Breakout Bulletin, Keith, who does a really great job. So we're just trying to keep people happy. That's all.
There you go. When you want the land of happiness, you hit up the Rock Lobster and you get on over to the Option Pit. The happiest man I know, especially when he's just twisting that knife for me over there. Scumbagging friends and neighbors at every opportunity. Of course, that's going to do it. On behalf of the Rock Lobster and Uncle Mike, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do. We'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.